Torsten, how are you modeling the second quarter GDP hit?
Yeah, so this is, of course, incredibly complicated. But in terms of the impact for the labor market, I mean, we've been looking at some of the daily data from Homebase. Homebase is a service that provides scheduling and payroll services to small businesses. And they have a survey of overall the companies that they work with, which is about 60,000 companies. And that shows day by day that we've seen gradual layoffs of hourly workers. And in fact, if you look at the numbers today, the amount of hourly workers that are working relative to January is 50% lower. So at the nationwide level, it's about 80 million hourly workers. So overall, the impact on GDP is going to be very severe and very significant. And what this could overall imply is that you could see the unemployment rate in the worst case jump as much as 10 percentage points in the US, which of course would be a very bad scenario.
And what does that do to GDP, Torsten?
So that, of course, pushes GDP down quite hard in the second quarter. The numbers, of course, that we've been looking at have been hugely a function of, will the lockdown last 1 month? Will the lockdown last 2 months? In China, you saw in Q1 GDP go down 15% from quarter over quarter. So now we expect, and the lockdown lasted roughly in Wuhan about 50 days. So if you do that simple modeling exercise and go back to your spreadsheet and ask what does that mean for US GDP and for European GDP, if we were a little bit later in Europe and US in terms of responding, and if the lockdown also lasts about between 1 and 2 months, you also get to that the impact on GDP quarter over quarter in Q1, not annualized rate, but just QOQ, could be down as much as 20-30%, which of course is enormous